Michael Saylor just went on the national news and dropped an absolute bombshell regarding his 4 new income generating products: Strike, Strife, Stride, and MSTY. But he didn't stop there. Michael also issued a little bit of a warning to the MicroStrategy short sellers. And I think this is very interesting considering the short volume on MicroStrategy today is hitting brand new record highs. But before we talk about that, I want to talk about this massive topic that everybody is now talking about. Everybody thinks that they can buy these new income generating products and just magically retire on Bitcoin. So we are going to be breaking down the differences between these products and why I do think that they can be the catalyst to help Michael and MicroStrategy begin eating away at that $313 trillion fixed income market. But before we get to any of that, let's listen to Michael himself.
Are in a situation where we have Strike, Stride, and Strife, 3 publicly floating preferred stocks that are not dilutive to the equity. They all meet a different market requirement.
Right.
That $110 million of Bitcoin we bought last week, that was acquired without issuing any common stock. So what's going on here is that we're using our $60 billion of Bitcoin collateral to issue credit instruments. They never come due. There's no liquidation risk. There's not even an interest rate risk, right? It's a non-cumulative preferred, and we could suspend the dividends.
Right.
So
before we talk about what exactly that means, suspending dividends, let's break down what all of these different products actually are in a very simple, easy to understand way. Now, I've seen a lot of people talking about these brand new MicroStrategy income producing products, and to be quite frank, we need to be better. We need to be better if we're going to explain these things and have people understand what they are. So I've spent a few hours going back and forth with my good friend ChatGPT, and I have tried my best to wrap my head around these new income products being released by Michael Saylor and MicroStrategy. As you can see, we have a very complex, but what I hope is easy to understand table explaining what all of these things are. Now, what I think is really interesting is when we kind of step back a minute, we can start to see some really interesting things from the big picture begin to emerge. Look at the release dates of each of these products. Strike was released in January 2025. That is STRK. Strife with an F, STRF, was launched in March. And then Stride with a D was launched in June 2025. Now, let's not forget, Michael also engaged in what was an enormous $42 billion capital raise at the end of 2024. So I think these new products are kind of an evolution of Michael's plan in late 2024, where he raised that $42 billion of capital to buy more Bitcoin. But let's start breaking down these things and really explaining what they are and what the differences are. Now, again, there has to be a huge, big differentiation between these products. Strike, Strife, and Stride, they are preferred stocks. This is very different to MSTY. MSTY is a covered call product that is based on MSTR, okay? So what they do is they hold MSTR shares, but they write covered calls. I don't want to get too complex and too granular yet, but this is a very different product than Strike, Strife, and Stride. Now, all of these things are somewhat similar. Let's start breaking them down. So Strike is the most interesting product to me personally. It has an 8% coupon. Right now, it's generating somewhere between 7.5% and 7.8% yield. And what's really interesting about Strike, and that makes it unique, is it's actually convertible into MicroStrategy. That's right. You can actually have the option to convert 10 shares of Strike into 1 share of MicroStrategy. Let's zoom in so you guys can see what I'm cooking with here. You can see that's what this box here explains. It converts into 0.1 shares of MicroStrategy. Now, this is unique. This is the only one of these products that is directly convertible into MicroStrategy. The other ones are not convertible. And as you'll see, the convertibility is going to help us kind of understand what kind of yields we can expect from each one of these respective products. Let's also keep going down here. So the STRK product is what you could call, it has a cumulative dividend. Let me start there. I don't want to get too complicated yet. Let's just say it has a cumulative dividend. And this is a little bit different to these other debt products that we're going to be having a look at. Let's jump on over here to STRF. So again, we can see it has a similar coupon. It's a little bit higher here. It's a 10% coupon, but this is because it's not quite as safe as STRK. So STRF, STRF, this is not convertible into MicroStrategy. So again, that is a really big difference here. STRK, I think, is going to be a very popular product because it is convertible into MicroStrategy. And this is why STRK is going to look a lot more volatile on its charts, because it has that option to convert into MicroStrategy. So the share price is probably going to mimic MicroStrategy a little bit more. Now, an easy way that I heard STRK explained was actually by Punter Jeff over on British Hodl's interview that was released this week. Again, kudos. They did a really good job of dumbing down these new products so that a smooth brain like me could understand it. Now, what's interesting is that STRK, it kind of has, let's call it downside protection. Because you're getting that $8 dividend, it would be really difficult for this share to trade much below $80, because what would happen? You have arbitrageurs who are going to step in and start bidding up that price. Okay, so that's really interesting. And that is, again, something a little bit different to these other yield generating products created by Michael Saylor. Something interesting about STRK is it's actually the first product created by AI. So MicroStrategy literally used AI to create STRK. This is maybe why it could be Michael's fan favorite, so to say. But let's keep breaking down these differences. So STRK, it's convertible into MicroStrategy. This is why it's going to be a lot more volatile. I like it because it has that downside protection of the $8 dividend. But then you also get a little bit more of the upside because it is convertible into MicroStrategy. This is why it's probably going to be the most volatile of these MicroStrategy's derivatives, because in the future, you can potentially convert this into MicroStrategy stock. Now, this is different. STRF with an F and STRD with a D, as you can see, they are not convertible. And again, STRD is kind of, I've seen a lot of people say this is a little bit more like a junk bond or junk debt. Again, I'm not an expert in this space, but when we're looking at the capital stack and we're looking at seniority, or I nearly butchered that word, STRD is junior. Okay, it's subordinate to STRF and STRK. Okay, this is why some people are saying it is not as safe, and other people prefer products like STRK with a K. I'm going to be really cautious and cognizant here to differentiate the names of these three different products because they are all so similar, which is, again, interesting. And again, I've seen so many people kind of wrongly lump in MSTY with these other three products, which is why I'm making this video. Because again, you guys know, I'm not exactly a stock picker. I'm a full-blown 100% Bitcoiner, but I've just seen nobody really break down and explain these things in an easy to understand way. So here I am trying to explain these things in a simple to easy to understand way. Now, what's interesting about MSTY is you can see the yield is a lot different. It's much higher. Right here, it's saying it's 160% annualized. So a lot of people are being led to the slaughter. They're just saying, and they're just comparing the yield on MSTY with the yields of STRK and STRD And the other one, okay? And this is, I don't think this is a fair apples to apples comparison, because when I show you some of these charts that I've got prepared for you, we can see that covered call strategies and covered call ETFs, like what MSTY is, they typically underperform the underlying in a pretty significant way. So the purple line on this chart is looking at the covered call ETF returns. You can see they greatly underperform just the straight ETF, the spider. And it doesn't matter what chart you look at, it's very common to see these cover called strategies underperform because, again, they are net short the asset. They are net short MicroStrategy. Again, don't be confused. They're not shorting MicroStrategy. They're selling covered calls and collecting premiums. Again, I don't want to get too granular here. I don't want to really delve into the options market for multiple reasons because I don't want to lose you guys. And I'm not the best person to be explaining it. As simple as that. I like to tell you guys straight off the bat, if I don't fully understand something, I'm not going to try to just LARP on the internet and pretend like I do. Now, again, let's start breaking down a little bit more of the differences here. Let's take a little peek back to this little Excel spreadsheet. And the final thing I wanted to cover is really drilling in that MSTY. You're kind of getting some MSTR stock exposure, but it's a little bit different to Strike. Strike is where you can convert into equity in the future. This is, again, a big difference between Strike and Strife and Stride. Again, I understand how confusing that could be. But again, I thought it was a video that needed to be made because right now, what we're seeing is literally everybody start talking about these income products. And in particular, the Bitcoin corporate treasury playbook that is now going mainstream. This is an article dropped in Forbes this week. The Bitcoin corporate treasury playbook. Look at the Gigachad there. That is a great photo. I actually do. That is a really good photo. I might use that for a thumbnail one of these days. But again, everybody is talking about this corporate treasury playbook because it is going mainstream and because some of the biggest short sellers in the world are now being, let's be generous, brave enough to short MicroStrategy. I don't know whether that's bravery or stupidity, but I do want to talk a little bit more about the short sellers because on this Bloomberg interview, Michael Saylor sent a massive warning to all of the MicroStrategy short sellers. And again, like we said, this is very interesting because at the time of recording, the exposure of shorts on MicroStrategy literally just hit a new all-time high. Have a look at that. We are seeing $11 billion of short exposure on MicroStrategy. Now, without further ado, let's grab that clip from Michael where he is openly naming the short sellers and responding to the short sellers. Let's play this clip from Bloomberg that, again, going a little bit viral this morning.
Michael, it's great to have you with us. We have a lot to talk about, and one of those things is a recent call from Jim Chanos. Of course, he's a legendary short seller. He came out recently and said basically, buy Bitcoin, short strategy shares. And just to set the scene here, I'm curious what you make of that.
You know, I don't think he understands what our business model is. We're actually the largest issuer of Bitcoin-backed credit instruments in the world. So last week, we just raised $1 billion by selling a preferred stock, non-cumulative, called STRD. That means we basically borrowed money that we never have to pay back, that we pay a dividend on, but we could suspend the dividend if we needed to. So Jim has been thinking that we somehow needed to sell the equity. We now are in a situation where we have Strike, Stride, and Strife, three publicly floating preferred stocks that are not dilutive to the equity. They all meet a different market requirement.
Right.
That $110 million of Bitcoin we bought last week, that was acquired without issuing any common stock. So what's going on here is that we're using our $60 billion of Bitcoin collateral to issue credit instruments. They never come due. There's no liquidation risk. there's not even an interest rate risk, right? It's a non-cumulative preferred, and we could suspend the dividends.
Right.
So at the end of the day, if he's lucky enough to short the stock below 1 times NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders.
So it sounds as if Michael nearly has an answer for everything. Even the very famous short sellers like Jim Chanos, who think they've figured out MicroStrategy, who think they've figured out the perfect trade. But I'm here to maybe exaggerate what Michael just said, and I think they're going to be set up for a world of pain. We can see right now MicroStrategy short interest or exposure, $11 billion. This is a new all-time high, and I am seriously, I'm interested to see what happens next as this Bitcoin treasury playbook is beginning to go mainstream. Are the shorts going to get absolutely pantsed? Well, let's not forget, we have seen lots of hedge funds absolutely blow up trying to short MicroStrategy. Jim Chanos, he's not the only one. Now, again, for those who don't know him, let's pull him up. Let's talk a little bit more about Jim Chanos before we talk about that next hedge fund I want to expose you guys to, and just remind you that lost a lot of money shorting MicroStrategy previous. So here we go. Short seller Jim Chanos has a brutal warning for MicroStrategy investors. So who's sending the real warning here? Is it Michael Saylor or is it Jim Chanos? But he has been selling and shorting MicroStrategy for some time now. He really seems to be not able to catch a break, because right now, at the time of recording, MicroStrategy seems like, again, we're not here predicting short-term price movements here, but it looks as if it's on the verge of continuing to rally. So what is going to happen? Are these short funds going to be forced to close, and are we going to see a short squeeze? I mean, this here is the price of MicroStrategy stock. We can see it's looking pretty bullish. It is looking very interesting right now. Again, we are going to talk a little bit more about what is it? We're going to talk a little bit more about what we should be doing with our portfolios in a minute, because obviously a lot of people keep asking me, Luke, why don't you buy these income generating products? Luke, you're silly for not owning MicroStrategy. I told you from day one, I don't own any MicroStrategy. And again, I think there are a lot of, let's say, sovereignty trade-offs that one has to be aware of if they are going to be buying MicroStrategy. And again, these are going to be some of the trade-offs we talk about here in a moment. But the next place I want to take us is to something else Michael Saylor said that I think is really interesting, and something I kind of wrote a lot about this morning. So these products, and I think the timing of these products accelerating when they are, I think it's really interesting. Like I showed you guys, Strike was launched in January, Strife in March, and then STRD in June. It looks as if nearly every couple of months, these products are being launched, and Michael is openly saying, look, if we trade under our MNAV MicroStrategy, we're just going to use these products to buy more Bitcoin. And again, I think this is really interesting when we start considering the supply suffocation, because the supply suffocation is one of the most interesting aspects when it comes to what is happening right now with this debt market, this $313 trillion debt market beginning to be tapped by people like Michael Saylor. Okay, it's really, I think it's something not a lot of people are paying enough attention to. And I really think that Michael Saylor, him going on Bloomberg and openly telling them that the public corporations are creating a supply shock and a supply squeeze in the Bitcoin space, we really need to talk about this, because if even half of what Michael said in this interview comes true, we could only have a matter of days left before the Bitcoin supply suffocation takes hold and there's no Bitcoin left on exchanges. And that day might be coming much sooner than you might think. Let's hear why right now.
Accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah. BlackRock
and the ETFs are buying another measure of that. And we've got nation-state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
Okay, so there's a few things to dig into there.
And we will dig into them in a moment. But I want to break down what Michael just said and put some numbers behind what he was just saying. He mentioned GameStop, MicroStrategy, Trump Media recently raising $12 billion. But those are not the only public companies raising a lot of money to buy Bitcoin. I want to take a little bit of a peep at all of the other companies who right now are contributing to what I think is the biggest supply shock in Bitcoin history. Again, I know how crazy that sounds, but I do think the supply shock is accelerating and it is absolutely not slowing down. Like Michael said, 50 million Bitcoin, $50 million worth of Bitcoin is mined every day. Now that would equal somewhere around 350 million a week. Now what's interesting is when we run the numbers, that would indicate something like 3,000 coins being mined every week. That's how much is mined. Now have a look at just the 3 public companies who I've included in this tweet that I looked at who came into the Bitcoin space and announced some big raises to buy Bitcoin. Again, this was just last week. We've got Logitech raising $1.5 billion. That's 15,000 coins. They announced that last week. We've got Venadi. This is a coffee chain in Spain. No pun intended. They just announced a $1.1 billion buy last week. That's 11,000 coins. And then we've got K-Wave Media announcing a $500 million buy. That would represent around 5,000 coins. So just those 3 public companies are representing something like 31,000 Bitcoin worth of demand or 10 weeks worth of supply being stripped off the market. And these are just 3 companies. Michael didn't even mention these companies. The bigger players like Trump Media just announced a $12 billion buy. Are you guys starting to feel what I'm feeling? I am feeling some serious tingling in the nether regions, and I do think this supply suffocation is only going to accelerate. Okay, it's happening, and it doesn't matter how the exposure is happening. It's coming from all angles, whether it's public companies buying spot Bitcoin or whether it's public companies raising capital in the debt markets to just go and buy the spot Bitcoin, or whether it's through these preferred debt instruments that Michael Saylor is creating, like STRD, STRK, and STRK, STRK. Or STRF, I forgot Strife. But all these companies, products, they're creating what I think is the most underappreciated thing in Bitcoin today, and that is this supply suffocation. Have a look at how parabolic to the downside this supply suffocation is now beginning to look. Now, I do want to crunch some numbers on the supply suffocation here in a moment because we do need to wrap our heads around just how little Bitcoin there is left. But again, I do get questions all the time. Luke, what is the difference between these yield generating products like Strife, Stride, and Strike? What do I do if I want to earn some income on my Bitcoin, or if I want to lend my Bitcoin out? What do I buy? What's the best product for me? Again, there's lots of different options. I have explained the differences between all of these options at the beginning of today's stream. So again, if you join late, rewind and check it out for a little bit of a breakdown of those products. Again, another option that I really like is actually the recent show partner who I partnered up with, who is Firefish. They are a peer-to-peer Bitcoin lending platform. You can go and use Firefish to borrow Bitcoin, or you can go and lend your Bitcoin on Firefish. And I really like these guys because they are fully hypothecated. They do not re-hypothecate your Bitcoin. This is peer-to-peer lending. This is how Bitcoin lending should be done if you're ever going to engage in it, okay? Multi-signature vaults, all of this stuff is very secure. It's very safe. If you do want to learn more about Firefish, I highly recommend you guys check them out. And you can use a promo code Luke to get 30% off the fees on your first transaction. So again, everything you need to know about Firefish is linked down below, but I think they're a really interesting alternative to these debt products that we've been breaking down today. MSTY in particular, and then we've got STRK, STRF, and STRD. Those are slowly but surely beginning to become tongue twisters 26 minutes into this live stream. Let's talk a little bit more about supply suffocation and when it ends, what is the end game, and what does it look like? So here I, again, wrote this today. I'm getting a little bit frustrated at how people are just simply not looking at simple trends. And again, I'm going to be cautious of what I say, but what I think is interesting is that 5 years after Michael Saylor started this trend of public companies adopting Bitcoin, 800,000 coins have been picked up by public corporations. That's just a fact. No extrapolations going on here. What I think is even more interesting is if we jump on over to bitcointreasuries.net, we can actually see between public corporations, private corporations, and governments and ETFs, there's now 3.41 million Bitcoin locked into these entities. And the majority of this Bitcoin has been bought in the past 2 years, the large majority. So what I think is really interesting as well is, again, we haven't talked about this. I might have showed you guys this one chart once on a live stream this week, and it's fast becoming my favorite chart. This is tracking the holdings of the public corporations and their Bitcoin holdings. Now, do you notice something interesting? This chart shows their entire history of Bitcoin holdings. Over 90% of these charts on this website, they only go up. So of the 800,000 Bitcoins sat in treasuries of public corporations, more than 90% of the companies with Bitcoin on the balance sheet are only increasing their holdings of Bitcoin. So again, it could be controversial. A lot of people say it's controversial, but I said, okay, crazy caveat and a crazy statement come in. I think it's Hotel California for those coins. And I think it's a similar case for the 3.4 million Bitcoin sat in ETFs, private companies, public companies, and nation state treasuries. I think 90% of those coins, of the 3.4 million Bitcoin sat in these areas and treasuries, are never, ever, ever going to see daylight ever again. Controversial statement, but again, this image, it's data backing up the controversial statement. Right now, we've got 5 years of public companies buying Bitcoin. The largest buyers are not selling. They're only accumulating. So this is where the numbers get a little bit interesting. This is a chart I show you all the time. There's a 16-year chart showing Bitcoin supply on exchanges. I like to zoom into the most recent 2.5 years of data here because it really shows how aggressive this trend here. And if you look at the past 6 months, I tell you this all the time, guys, about 80,000 to 100,000 Bitcoins being ripped off the exchange every month. Depending upon what data set you look at, there's somewhere around 2.1 to somewhere around 2.5 million Bitcoin on exchanges. So if what's happened in the past 6 months happens for the next 21 months, there is no Bitcoin left on exchanges by March 2027, 21 months time. And again, a lot of people call me crazy. A lot of people say, Luke, you're too bullish. You're just a hopium dealer. You're just saying bullish things for views and likes. And again, guys, I'm really not. I really just believe I'm extrapolating trends that are already happening today. I mean, it's pretty clear. We have a 5-year trend now of Bitcoin leaving the exchanges. I just don't think it's controversial anymore to just say, look, what happens if this continues? And I think this is the most underappreciated thing in the Bitcoin space today. I think everybody is still underappreciating this trend. Again, I got called a nutcase when I originally wrote about this in 2021. You can see the release date of this tweet was 2021. I started formulating these ideas in 2020, where I said eventually we're going to see Bitcoin's final cycle. And it was purely because of the supply suffocation that I thought I saw beginning in 2021. And again, at the time, sure, the people who called me crazy, they kind of had a little bit more data on their side. Because in 2021, we only really had 1 year of a trend change with Bitcoin leaving the exchanges. But since then, I said, look, this is interesting. Public corporations have changed the game. Here's the big green box I've been screaming about for 5 years now. Again, this is a 2021 article. I said, if this continues, this trend that we see in 2021, we have no Bitcoin on exchanges by 2030. And I think it's all over. I said, if we see this happen and there's no Bitcoin exchanges by 2030, the price of Bitcoin is not going to follow a stock to flow model. That was the popular model back in 2021. Everyone's like, oh, stock to flow, stock to flow. I said, no, we're not going to, Bitcoin is going to break all of these models to the upside. And now in 2025, I think some new people listening to my rants think I'm unfair to the power law. Guys, I'm just jaded. I've seen these models come out every bull cycle, and every cycle people jump on these models and they artificially blow up their following because they know it's popular to say, oh, I have the perfect model. I have the secret sauce. Trust me, I know where Bitcoin is going. Buy my trading course or my Patreon, and I'll tell you all my indicators and show you exactly when to sell Bitcoin. I mean, it's the same thing every cycle, guys. So again, a little bit of context for why I am so anti-power law. Seen it all before. I've been writing about these models for 5 years now and saying, look, they're going to fail. They're going to break to the upside. And the Bitcoin super cycle is going to be how Bitcoin gets monetized. And that's purely because Bitcoin's a technology. We can see every technology has ever been adopted. It happens in an exponential trend. And I just think all of this is going to be incredibly unpredictable. It's going to be incredibly volatile, and it's going to rip faces off people. And I just genuinely think the only thing you can actually do to prepare is just buy Bitcoin, hold it in self-custody, and back up your self-custody. And those are the only things we can be sure of. Everything else, who knows what's going to happen with these debt products? STRD, STRK, STRF. I have no idea, but I have to trust someone else to buy them. This is why, again, I just encourage you guys to self-custody your Bitcoin, buy your Bitcoin, take it off the exchange, and please just have at least the majority of your net worth stored in that kind of way. That's why I always encourage you guys to check out the Bitcoin Well. I think they're the best place to buy Bitcoin. They encourage you guys to take self-custody of your Bitcoin, which is, again, incredibly rare in the Bitcoin space. And I always encourage you guys, once you've bought your Bitcoin, stick it in a Bitcoin-only hardware wallet. There's a ton of great options out there. You guys can actually get a 5% discount if you want to buy a Bitbox using the promo code linked down below in the description. Once you've got your hardware wallet, I then encourage you guys to back up your hardware wallet with titanium. Do not write down your Bitcoin 12 or 24 words on paper. Put it on titanium. These things are fireproof, crush-proof. They're even airport-proof. Okay, these things should be the only place for your Bitcoin 12 or 24 words. And again, I think that's the only thing we can really predict. Everything else is unpredictable. The world is a crazy, crazy place. We don't know what's going to happen with these stock brokerage platforms in the future. We have absolutely no idea. That's why I encourage people, just buy your Bitcoin, self-custody your Bitcoin. Please keep the majority of your net worth in a place where you have full sovereignty or autonomy over it. Okay, buying stocks, you don't know what's going to happen in the future. Okay, it's as simple as that. Something that is going to be happening in the future is I'm going to be at BTC Prague next week. So again, if you guys don't have your tickets for what is probably going to be the biggest Bitcoin conference in Europe, highly recommend you check out BTC Prague. There's a ton of actual intelligent people speaking on stage. Michael Saylor, Adam Back, Jack Marlers, and then you're even going to see the lunatics like myself, the uneducated randoms. I'm also going to be speaking. So again, if you want to come tell me I'm crazy for being incredibly bullish, come to BTC Prague. You guys can get 10% off your tickets using the promo code down below for that one. And what I said, guys, look at that number, 666 of you guys on YouTube and Twitter. I am actually more late than I thought I was, so I actually have to bounce. And with all that said, I'll see you all in the next live stream. If you do want to know how you can retire with real Bitcoin, not Bitcoin debt products that you don't own, I'm going to put a recent deep dive that I did on that topic up on screen, somewhere around there. And again, if you do want to hear British Hodl and Peter Dunworth's thoughts on these debt products we discussed today, I'm going to put a link to our recent interview up on screen, somewhere around there. Well, that's it, guys. See you in the next one.